Hey, what's up, everybody? Just checking out the news, of course, and what's flashing across the financial. In the financial news across the screen is Capital One is looking to buy Discover. Woohoo! Right, what's going on with that, right? So, again, if you're just coming to the channel, I encourage you to, of course, subscribe first. Hit that subscribe button, and then as well, I want you to like, comment, and share because I want you to be active in the community, man. Let's talk it out. Let's learn this money. Let's master this money game together. That's what we're here for. But let's get back to it. So, looking at Capital One, looking to purchase Discover. Let's break this down real quick so we can understand what's going on and why Capital One would want to purchase Discover. Number one, let's take a look at it for what it is. Capital One sees blood in the water, right? Discover reported about a 60% profit decrease in the fourth quarter of last year, right? So they're seeing blood in the water. They see opportunity. So, of course, they're going to go after this company that can, of course, potentially pose them a lot of upside. So, blood in the water first, right? Number two, Capital One is a bank. Discover, of course, Capital One is a bank that issues credit cards, right? Discover also, issues credit card, but Discover also has a payment processing network, which is similar to like when you look at your debit or credit cards, you've got Visa, you've got MasterCard, you've got American Express, and then you've also got Discover, which was the fourth player in that payment processing network, right? So Capital One acquiring Discover will get them in the payment processing game, right? So that means every time that you go use your credit or debit card, right, whether it has a Visa logo, MasterCard logo, whatever it is, every time you use that, those companies get processing fees, right? So that's like in unlimited returns, right? Over and over and over. Every time you go use your card, they're going to get a piece of that money that's coming through, that those companies are basically paying them a fee for the right to have access to their network so their customers can, send them money or transfer them money using the network, right? So Capital One, of course, already has about 100 million, 100 million customer base, right? Discover has about a customer base of over 300 something million, for their cards in their network, right? So that would make Capital One basically a big player to start trying to compete with Visa and MasterCard. Now, don't get me wrong, they're still going to be, number three behind them for sure, but that gives them a leg up so they can start getting those processing fees, and it gives them another source of revenue coming in. Now, the third part of that is, and I want you to think about it, both Capital One and Discover basically go after the same client base. So they're really acquiring a similar client portfolio as them. Who do these companies go after typically? They go after the subprime credit market. So that's people that typically have credit scores below 700. And most of those people are unfortunately lack a little financial literacy, right? What they do is those types of clients typically will leave credit card balances on their cards from a month-to-month basis, and they pay all kind of high interest and fees over and over and over again. So it's a high risk, high reward, client portfolio. So if those people stay on the books and they continue paying, of course they're going to tend to make a lot of money in fees and interest, right? But on the flip side of that, as we're both seeing, because Capital One's profits were down, I think, about 40% in the fourth quarter, because what they're seeing is during this credit crunch, during these tighter times, those are the first people that typically will default on their credit cards. So those companies are also seeing a lot of losses right now. So again, those companies will target the subprime credit customers because quite honestly, they don't pay their credit cards off on a monthly basis. And that's how those companies typically make lots of profit. So let's stay up on this kind of stuff, man, so we understand what's going on in the financial markets, why these companies are making the moves that they make, and also understand why they're targeting the type of customers that they go after, because they want you to remain lack financial literacy, because the more financial literacy you lack, the more profit they tend to gain. So, all right, let's master this money game. Let's get it. All right, I'll check in with y'all later. I got to finish my workout.